Welcome to The Explainer. Today, we're breaking down a pretty big economic vision, one from Treasury Secretary Scott Bessant. It's a plan that's all about closing that huge gap you hear about between Wall Street making a killing and, well, the rest of us on Main Street. All right, so let's get right to the heart of the problem, right? It's this weird situation. Wall Street is absolutely thriving, portfolios are going through the roof, but then you look at Main Street and folks are not happy. Public approval on the economy, it's way down. So what's the big plan to fix this disconnect? And you can really see this split right here. I mean, look at this. On one side, you've got Wall Street's view. Things are great, better than expected even. But then look at Main Street's view. People are feeling the pinch from inflation. Net approval for the economy is down. That right there, that's the gap we're talking about. And that's what this whole plan is supposed to tackle. So to get our heads around this, we're going to break the plan down into 5 main parts. First, taming the budget deficit. Then, how they're using tariffs for national security. After that, we'll tackle the affordability crisis. Then, a big one, reforming the Federal Reserve. And finally, we'll look at their grand vision for Main Street. Okay, first up, taming the budget deficit. The administration is pretty clear on this one. Getting spending under control is like step 1. It's the foundation for everything else they want to do. So why the urgency? It really comes down to this number, 6.8%. That's the peak budget deficit as a percentage of GDP. In the administration's eyes, that's not just a warning sign. It's a huge flashing red light. They're saying, no way. That's totally unsustainable. So what's the fix? Secretary Bessant talks about a steady fiscal contraction, which, is just a fancy way of saying the government needs to tighten its belt and spend less, but in a controlled way. The big goal here is to get that deficit down to a number with a 3 in front of it, so below 4% of GDP. The idea is to get the country's finances back on solid footing. All right, let's move on to the next major piece of this economic puzzle. This one's a bit more controversial, using tariffs. But they're not just looking at it as a trade thing, they're reframing it as a tool for national security. So the way Secretary Bessant lays it out, tariffs are basically a key lever in their foreign policy toolkit. You can see it in action, right? They put these so-called fentanyl tariffs on Mexico to push for more cooperation on stopping the drug flow. And when China started flexing on rare earth minerals, they threatened a massive 100% tariff. The point is, they're using them as leverage to get other countries to the negotiating table. And this quote right here really gets to the core of why they think this strategy won't just hike up prices for you and me. The thinking is that the Chinese business model is all about volume, volume, volume. So the theory goes, they'd rather eat the cost of the tariff themselves than raise prices and risk losing all those customers. It's a big bet on their business model. Okay, let's talk about the thing that probably hits closest to home for, well, pretty much everyone, the affordability crisis. The cost of living is high, and the administration says they get it, that people are feeling the squeeze. So they've got a 2-pronged strategy for it. And just how bad is the pain? Well, you can kind of boil it down to this one number, a 35% increase. That's how much their so-called common man index went up. It tracks the stuff working families actually buy, gas, rent, used cars. So when they say tackling this is priority number 1, you can see why. So their plan is pretty straightforward. It's a 2-step deal. Step 1, control prices. Go after the big ones, like gas and rent, and try to bring those costs down. Step 2, get real incomes moving up. The idea is to make sure your paycheck is actually growing faster than inflation so you have more buying power. All right, now we're getting into probably the most complex part of this whole vision, reforming the Federal Reserve. They've labeled the Fed the engine of inequality, which is a pretty strong statement. Let's unpack what they mean. So to really get their argument, you first have to understand something called quantitative easing, or QE. It sounds complicated, but here's the gist. It's basically when the central bank creates new money to buy up things like government bonds. The whole point is to pump cash into the economy to get people lending and investing. And man, the Fed used this tool a lot. And this quote from Secretary Bessant really says it all. I called the Fed the engine of inequality. Wow. The argument isn't that it's the Fed's job to solve inequality. It's that their policies, especially all that QE, were actually the leading cause of it getting worse. And this visual really drives the point home. It shows what they call the 2-tier economy that QE created. On one side, you have the asset holders, people who own stocks, real estate, that kind of thing. They did great. Their wealth shot up. But then you look at the other side, the non-asset holders, and yeah, not so much. This is what they mean by a two-tier system where a whole lot of people got left behind. So what's their vision for a new Fed? Basically, a much smaller role in the economy. They want the Fed to be more predictable, less of a big player trying to steer everything. That means getting rid of stuff like the dot plot, where they try to predict interest rates. The goal is to get the Fed back to being this quiet, stabilizing force in the background, not the star of the show. Okay, so if step one is reining in the Fed to stop what they see as a cause of inequality, then what's step two? How do they plan to actually build wealth for Main Street? Well, that brings us to the grand finale of their vision, a plan to directly connect the prosperity of everyday folks with the success of Wall Street. And a huge part of that plan is a list of tax cuts they say are totally non-negotiable. These are all aimed squarely at putting more money in the pockets of working Americans. We're talking no federal tax on tips, no federal tax on overtime, and no federal tax on Social Security benefits. Plus, you could deduct your auto loan interest if you buy an American-made car. And then there's this really new, kind of radical idea called Trump accounts. Here's the deal. Every single child born in America would get $1,000 at birth, put into an investment account. The vision here is huge. Make every American an owner, a stockholder, right from day one, and hopefully teach financial literacy from the ground up. So at the end of the day, it all comes back to this one central theme. They're calling it the biggest merger in history because it's about merging Main Street and Wall Street. The whole bet is that these policies, all the things we just walked through, can finally fix that disconnect we started with. It's not just about a bigger economy. It's about giving everyone a real, tangible piece of the pie. And that leaves us with a big, provocative question. Is this the plan that finally does?